Coming to you live from downtown Detroit, this is Benzinga's PreMarket Prep with your host, Joel Elconin.
This is a volatile puppy here, isn't it?
And Dennis Dick.
I'm bidding a penny. I will buy the stock for a penny.
With everything you need to start your trading day. Good morning, everybody. Happy Friday, everyone. Welcome to this end of the week edition of Benzinga's Pre-Market Prep. Spencer Israel here with Joel Elconin and Dennis Dick on the show today. Earnings continue to be the main story on the street, so we'll get through as many of those reports as we can. Apple, Pandora, Herbalife, ATVI, CBS, AIG, just to name a few of the stocks reporting yesterday after the bell. We'll talk about Apple, but we'll also save the bulk of our Apple discussions for our guest today because Mike Olson will join us at 8:35. He is senior research analyst at Piper Jaffray. He is the analyst at Piper Jaffray who covers Apple, and he's one of the best Apple analysts on the street. So Mike will break down the Apple report for us, or with us, I should say, at 8:35. Joel, before we do that, talk about the markets and how we're doing today.
SPUs are up following Apple higher, $6 right now. Apple's trading up. High 79.50, low 76 even. Tight range here. Need to take out that pre-market high. The all-time high made on Wednesday, 85.50. That's a nice target on the downside, on the upside, on the downside. I don't know. Until we take out that pre-market low of 76 even, we may see nothing on the downside. Crude up 18 cents here, 54.72. We got a tick over 55.03. That's the current high. And gold and silver in the red, just kind of bouncing back and forth. Gold down by 340 at 1274.70, and silver in the red by 4 cents at 17.09. Dennis, how you doing this morning on the final day of the week, Friday?
Waiting for jobs number.
Yeah. So
ready to trade financials.
Yeah. Well, strong number. What are we? Do we have any guesstimates on the job report?
You got Brentster on. What's he doing over there?
I'll pull up the
Brentster's not in yet.
No,
Brentster's not in yet.
No,
he's sleeping in today. He's getting
we got young Luke. We got young Luke running the controls over there.
Some needed sleep, but I will look up what we're looking for today. Give me 1 second though.
All right. Well, let's.
Give 1 second.
1001, 1002, 1003.
Come on, Spencer.
Oh my gosh.
Dropping the ball. Live radio here.
You threw me under the bus, Dennis, and I didn't realize I have to go hunt down.
We didn't talk about that on the pre-market show.
Oh, okay. You got me. Fine. Okay. Jobs number today at 8:30. Here's what we're looking for. Non-farm, we're looking for 310,000 jobs. And what else specifically? Unemployment. Do we have that number?
3.9. Are we going to get a dip under 4?
Is that real? It's not real.
No.
What?
Because they don't include anybody that's not looking for jobs, and everybody gave up. That's why the number keeps coming down.
What's the unemployment?
3.9% is crazy if that's really as low as that. But anyways, remember we were 6s and 7s like a couple years ago. 3.9.
Yeah,
there must be a bull market going on here.
It's all Trump policy. That's basically what it's done.
Media will find another reason.
What's the unemployment rate in Canada?
I have no idea. Well, I'm not an economist. I'm a stock trader. So let's move away from these economic numbers. All we need to know is whether they beat or not. And we know the jobs number hasn't even been moving the market lately. But the stocks that do move off the jobs is the financial. So that is what you want to pay attention to today. Let's do a little preview on some of these financial stocks here. Bank of America getting very close to its 52-week high. I got to go look at the book.
52-week? 52-week, Dennis?
Okay, how many weeks are we talking here?
That really bothers me when people say that, like 52-week, because you're talking about a 7-year high.
Weeks?
We haven't traded.
How many years?
We haven't traded over $30 since October of 2008.
I'm talking 28.
Yeah, we have not. Yeah, well, the high in October was 38.50 in 2008 and kind of had a bad month, ended up at 24.17 that month. And then 16 and a quarter, 14.08, 6.58, and then 3.95. So
$3.95.
That was the close in February 2009.
You know what? I had Bank America all the way down. That was one that I held through the financial crisis. It came back up into the teens. Like 3 years later, I was like, thank you very much. I'm getting out. Bank of America. That's financial crisis got them. But anyways, they're back. They're back.
Yeah.
Well, I'll tell you in the book, $28 is 170,000 shares there. That is significant. That is the level that it absolutely needs to take out to go higher. And it's got a little bit of backup. There's another 82,000, 2805. Book is pretty thick. But if you get a jobs number that the market's happy with, maybe we'll see a rally in these financials. Remember, financials usually go the opposite direction to the overall market because they want to see higher interest rates where the overall market does not want to see that. So financials is what is going to move off this jobs number today.
4.2% is what we're looking for unemployment. So not going under 4, hopefully. Well, I guess not hopefully, but that's the estimate, 4.2%.
All right, 4 highs, 792, 798, 796, and 794. So you got some sellers ahead of that. The other charts look the same too. XLF, that has a big level to take out. This $27, that's where that's lurking. Boy, Goldman Sachs is just teasing traders here. Look at that. It's trying to break out. Did yesterday, but came back and sell within that area. I don't know. You have to maybe use 248 for a breakout.
Why are we going down on Goldman here? We just fell a buck here on Goldman, 246.
Really?
Multiple trades too. Anybody say something on Goldman?
I'm looking right now, but
I'm looking too.
Because I said it was at the top of the trading range. And
maybe that was you, Joel.
Jimmy A, Joe C.
Somebody got excited and just hit it down all the way down. Maybe it was you, Joel. You're influential here now.
Top of the trading.
I don't see anything else.
All right, let's talk Apple.
246.
Apple. Let's talk Apple.
You want to talk Apple today? Why do you want to talk Apple today?
Because I got to leave the show a little early to go stand in line to get my iPhone. I'm getting the 11 because they.
How do you get the 11?
Yeah, because they want to test it out on people that are really tech savvy and everything. So I'm getting the 11.
They want to see if Joel can actually work an iPhone.
I'm getting the 11 for 1100. But good report, Spencer. Give us that report.
Good report. It was EPS $2.07 as a 20-cent beat. Sales of $52.6 billion versus a $50.79 billion estimate. So a $2 billion beat there. They see their Q1 sales coming in line with the estimate. Their Q4 iPhone units, they sold about 46.5 million or 46 2/3 million iPhones last quarter, which is up 3% year over year. They sold about 10.3 million iPads, which is up 11% year over year, and they sold about 5.4 million Max, which is up 10% year over year. Services revenue also increased to an all-time high, which we know is something that Wall Street will be watching closely in terms of Apple's future as they move away from hardware and more into services, and that revenue did reach an all-time high.
$174. Apple at all-time highs here as well, up 3.5% here again. Everyone loves the stock up here, and I still own the stock. I'm sticking with it. I still like it too, but man, this has been a hell of a run. I think if you're coming in here and putting new money in Apple now, I think you are way late to the party, because this stock had a 2-year consolidation period between 120 and basically $90 between 2015 and 2016. Then we know beginning of 2017, we broke out of that range and we had the gap and go from the one earnings report, and we have never looked back here. And Apple's been straight up. Everybody hated it at $90. They all love it at 174. This market does everything, especially the media, does everything backwards. I'm not putting new money in Apple at 174. I just think it's too much now, but I'm sticking with my current position.
Legal loss of $1.6 billion for Goldman Sachs. That's according to Jimmy.
Yeah, I see that too, but that's and they were saying it was expected 1.5 billion. I don't know if that's. I saw that headline as well. I'm not sure if that's what the reason is. I think this is just somebody, but somebody just hit down 245 too. Somebody wants out. Somebody wants out of GS. It's a significant move down on GS because a lot of your other banks are trading up here this morning. So something's up.
Only thing I can tell you about Apple is that there's a seller at 175. 174.91 is your pre-market high. And you've just kind of sniffed around there in the last 4, 5, 15-minute brackets. So that's all I can tell you. 175, that's resistance for now. After that, half and whole numbers coming back on the downside. We really haven't peeled back that much, but decent pre-market support at 173. So there are your early parameters, 173, 175 in Apple.
Watch the opening print. Make sure this thing doesn't pull a Baba. We talked about Alibaba yesterday having great earnings, and we warned everyone too and saying, look, the only reason that I don't like it is because they had been hitting stocks that had been running up into the report. Alibaba opened up at almost the high tick and tanked, and then eventually lost $6 throughout the day and was actually traded in the red and closed in the red, despite a great report. That's the concern here for Apple. Not saying that's going to happen because we've seen Amazon and Facebook, and they didn't do that. So there's some stocks that haven't done that. Apple did blow it away, but when something's trading up $6 in the pre-market, it's been running up in the report. It hasn't been the play to really buy it. It's been more of the play to fade it. And I'm not sure that's going to work out this way in Apple, but it would have worked yesterday in Baba.
Just out of curiosity here, I wonder what the 170s were going for on the close yesterday, right? Because they were a couple bucks out of the money, right?
You want me to look? You want to look?
I'm looking. The 170 call.
Oh, you're going to be faster than me.
You could have made some money.
Where are they going?
Well, not a lot of money. You would have had to pay 270 on the close.
Those option writers just know.
Yeah.
They are good, man. They figure it out. So you're paying 270 for the 170s?
Yeah.
So you're up about $1.30. Your risk return on that is just terrible. So this thing goes $6 in your direction, and you're still only going to make yourself $1 or $1.50 on that 270 option that you paid for. That is scary. People say, "Oh, I made 50% of my money." Yeah, but in options, you often lose 100% of it. So you need to be. I always say when I'm doing an option trade, if you want the 3-to-1 risk reward, especially if you're buying options, you need to be making like 300% or 200% at least, because in a lot of cases when you're buying options, you lose 100%. So if your risk is 100%, your option goes off the board worthless. You want a 2-to-1 risk reward, you need to be making 200%. If you want a 3-to-1 risk reward, well, I guess if you want a 3-to-1, then you got to go 300%. So that's the way I'm buying options, but I hate buying options. I'm an option seller.
All right. What do you want to do? You want to do Pandora, Herbalife, Activision, CVS,
let's go to Pandora.
Pandora.
It looks like it's going to be another one of your disaster stocks of the day. A stock that we've hated on this show for a long time as well. We get some right, we get some wrong. Tesla we've got wrong. Pandora we've got right. I've never gotten Pandora. I know it got up to $40 back in 2014, but I can remember talking with the stock multiple times in the teens and saying, I think everybody's just eating their lunch. And Pandora is now $5 stock, $5.97. I want no part of this.
It's actually funny. Yesterday, I saw a good headline for Pandora. This is before the report came out. In the middle of the day, this third-party company, Sensor Tower, they said in the third quarter they tracked all of the apps on the App Store, and in terms of apps, non-gaming apps that made the most revenue in Q3, Pandora was number 1 in terms of apps with the most in-app purchases, highest revenue in the whole quarter. So I thought, oh man, that's pretty good news. They must have done something well last quarter. No, apparently not. Q3 EPS 27-cent loss versus an 8-cent loss estimate.
So the company ever made any money?
No.
Were they ever profitable?
I don't think so. Sales of $351.9 million versus $380 million estimate. So they missed both those numbers, and they got punished hard.
I don't use Pandora. How is it different than all these other music companies
like
that are
Spotify,
online? How is it different?
Like Spotify? Like who are you referring to?
Like any of them. Like how do they differentiate themselves? Why would I want to? Give me the bull case for Pandora. Like why would you invest in something like this? I honestly don't know.
The biggest difference that I can tell between any of the three, in Pandora, Spotify, and then Apple Music, is that in some cases certain artists will debut on certain platforms, or certain artists will not put their music on other platforms. Like Taylor Swift famously held out and didn't put any of her stuff on Spotify for a long time, and because they weren't compensating the artists. So that's the biggest difference, is that sometimes you get some artists who are on platforms and not other platforms, but there really is no real big difference. It's all just paying for unlimited music on anything. Yeah. So there really is no big difference. And Spotify is trying to IPO, and they also don't make any money. But that IPO is very interesting. They're trying to go around the typical IPO process and just go straight to the consumer, but straight to the market. But no one makes money because it's not profitable.
I'll remain bearish Pandora then. So it's at $6.02. My target is still 0. So even though it's going to have little pops here and there, I'll stick with a 0 price target on Pandora.
Someone likes it at under $6, Dennis. That's taking out the former.
Not me.
Yeah, no, it's not you. If you were sure, Marlon. Former all-time low was from June of this year at 6.76. You're exceeding that low by over $1 at the pre-market low. So showing a little bit of life here. I think, maybe someone just trying to bring in the short since we traded 752 yesterday. So now the former all-time low will be resistance at 676 and 5 cents. I mean, I don't think they're going to crush it down under 5 today. I don't know. Just shorts bringing it in a little bit to stuff.
They do crush some things sometimes when they feel like it, though, and they continue to crush. Teva yesterday, you didn't think they were going to crush it under 12. They crushed it under 11.
All right, Pandora doesn't take.
My price target's still 0 on Teva, too. I have a lot of 0 price targets here. I should be an analyst. I'd probably be the only analyst on the street coming out with 0 price targets.
2 steak dinners, it doesn't trade 5 today. Just double or nothing. It's just double or nothing.
The thing's got to fall another 20%.
You don't have to.
I'm not giving you that. You have to give me like
yes or no
odds.
You have to say, okay, I'll give you a 5-1. So I'll owe you 10 steak dinners.
No, I'm not.
Or even.
5-1 is getting better, but
10-1
because it takes $6.
10-1.
$6 stock to go to $5 is hard to do.
20-1.
20-1
I owe you 40 steak dinners.
You can't afford to have 40 steaks. You can't. Okay. You'd be feeding me steak dinners for the rest of my life.
Okay. All right.
No, we're not betting on Pandora. But anyways, I just think it's just so much overhead supply here. I don't. The one thing it's got going for it is some of the dogs, do report, and some of them do bounce back just because they've been hit so hard all the way down. But I'm just not going to. This thing, I don't get it. Like I said, and I'm sticking with my bear theme on Pandora.
All right,
Apple's go through that 175 right now, Joe. We are right up there kissing it. Man, look! Oh,
it's gone. It's gone.
PreMarket Prep taking out the 175 resistance in Apple.
For now, yep. There you go. You're making new highs as we speak, up $7. So scratch that 175. I still think it's a level. I still do. I mean,
I said 180. Didn't I say 180? Didn't I say it?
Spencer has been.
Didn't I say 180?
Yeah,
I like your optimism here. Help Denny's portfolio out. Go, Apple, go. Go, Apple, go. Okay. What about the suppliers? We never talked the Apple suppliers. They're all up significantly here as well. Go to Skyworks, SWKS. It's trading up $3. You can go to Broadcom, AVGO. It's trading up $4.50. You can go to Cirrus Logic, CRUS. It's trading up $1.69. QRVO is another one. It's bid up, was trading up last night. Finisar, which had a terrible day yesterday. I don't know what happened with that, but it got destroyed. It's bounced back a little bit here as well. It's some of your major suppliers there for Apple. Cirrus also had earnings as well.
All right. And isn't OLED one of them too? And didn't that report?
There's a ton of them, and it probably is. Yeah, OLED, good one, Joe. Universal Display, it's up almost $5 here as well. Apple suppliers are hot because all these iPhones going off and being sold.
Okay. And big lines in New York. I don't know about here in Detroit, but big lines.
They want the iPhone 11.
All right. 175.20. That's your last print. 175.30. Apple continues to climb here in the pre-market trading. All right. Other earnings reports.
AIG. Let's go AIG. We never give them love like you were saying on the pre-market show. Let's give AIG some love. Train down $2.50. I own this one in my investment portfolio too. I own a lot of stocks. AIG.
Q3 adjusted EPS of $1.22 loss. That may not compare to a 69-cent loss estimate. And that's all I'm seeing right now. I don't see any guidance, and I'm not seeing any sales figures. So just an EPS.
This was mostly hurricane related, this bad report here. And honestly, I think, you had to expect that they were going to have a weak report with the hurricane damage. We did have some significant damage going through in the last quarter. So I think this is one that actually could get bought at these lows. So 62.50, I am talking my book here for once. I usually talk against my book. Talk with my book here. I think AIG finds some buyers here. I don't know if it gets it all back, but I wouldn't be surprised if AIG started clawing its way back up.
Light print at 62.20, currently trading 62.63. Keep an eye on your October 13th low of 62.24. That's a potential support point coinciding with the pre-market. Underneath that, a double bottom at the 61.50 area. But that's the area of support right now for AIG.
$5 coffee store, Starbucks, SBUX. Disappointed the street. The stock started trading down, and then BTFD came into the rescue. Stock has got all of its losses back, come all the way back up to scratch. Spencer, what's going on here?
I'm trying to remember what the latest crazy Starbucks Frappuccino flavor was, like zombie. I don't even know. I'm making that up, but I'm sure there was
zombie.
Or wait, what was the one from like 2 months ago? The pink one. Forget it. I don't know. Forget what I'm talking about. I don't know.
Was that a Halloween coffee?
Sure, Halloween flavored. There was like the pink one. I don't remember. Okay. Anyway, Q4 adjusted EPS of 55 cents is exactly in line with the estimate. Sales of 5.7 versus 5.8 billion dollars. They are also increasing their dividend from 25 cents to 30 cents per share. That's good news. Their Q4 guidance, actually, I don't see any Q4 guidance or Q1 guidance right now. So the Q4 number, EPS, it met, sales, slight miss.
They hit this down in the 51 handle last night. Then the conference call came on. They obviously said some pretty good stuff in it because then it started popping. And now we're all the way back up here, 54.75. Got all the losses back here. What do you make of this one, Joel? You know, when you see a stock in the after hours get hit really hard, like Yelp, you know, yesterday was, you know, the same story. It was down $6 and came all the way back. You know, how do you trade that? What do you do?
I mean, I think if it's not like a biotech or something like that, I think a lot of times, you know, the price history says, wow, I saw this at 50.75, man. I mean, I just think for me, it'd be more natural to see sellers, you know, in this. Like, I would have felt that, like, I missed
people happy that it came back for them.
Exactly. Quick commentary on Starbucks here across the street here at the Benzinga World headquarters. Great service. Really, I mean, you go into that thing and you think, man, look at that line. It's going to take a while. And they just have, what do they call them? Barristers or whatever, the people that make them?
Baristas. Oh.
Baristas, so too?
Yeah.
Barristers.
Oh, my gosh.
They just call them bears.
That's a Canadian word there. And great service. I mean, that's what I have to say. It's just really good service. Let's see what happened yesterday. Yesterday, 54.87 close. So that's a little bit of resistance. I don't know. Just a lot of highs in the 55 handle. 2-day high, 55.59. I don't know. There's just a lot of highs in the 55 handle. So I'd be more of a seller here. If it gets over 55.75, it has some room. Still hasn't recovered from that gap down from last earnings report. I don't know. Don't have a great feeling here on the long side for Starbucks.
Jump away from the earnings parade just for a second. I want to talk about two biotech stocks that obviously didn't get the memo that biotechs are in a bear market. Juno and Bluebird, Guno and Blue, reported. They got some upgrades yesterday. Man, those two stocks blast off into orbit. Look at Juno. You had, you know, obviously just analyze this from the last 3 months. Hanging around 26, 27, 28 bucks. Kite gets taken over. Boom, the big pop from 30 to 45 in like 2 days. Consolidated for 2 months, and now we blast off another 15 points. That's a technical pattern if you ever saw it. The 15 point up, the consolidation, another 15 point up. Perfect technicals on this Juno. Right up to the $60 resistance point. Big hole number as well. This thing is a technical darling here right now. But wow, that was an impressive move for Juno and for Bluebird.
And what was it? Was it upgrades or?
They had earnings, I think, too, and then they got some upgrades, and they just decided they were going to take it to that price right then. Like crazy moves, man.
Yeah, $60 goes out right near that. Trading down only down a penny here, so hard to find resistance. See if we got any pre-market action.
I say 60.
Yeah, yeah. See what happens. 60.32, but now you've come back and it's really tightened up. So above 60, obviously playing it from the long side. Below 60, going to be hard to find support in the issue.
Jump over here to another stock that was going the other way yesterday, and we got a little bit of trouble in merger land here. Time Warner TWX gets massacred there. DOJ report saying that they are, potentially, going to give this deal some trouble. Got all the way down to $92.02. It's bounced out those lows. It's trading 94.70. You look at it here now and you think, okay, well, now does it get interesting for you? Spencer, you had some thoughts on this. What are your thoughts here as TWXT not getting some love from the DOJ?
Right. The report was from the Journal that the DOJ could block the merger. And I mentioned on the pre-market show something that I'd read, and I couldn't remember where I read it. Well, actually, I read it on Benzinger Pro because we reached out to AT&T to comment, and here's what they told us. They said that negotiations regarding the acquisition, when the DOJ reviews any transaction, it's common and expected for both sides to prepare for all scenarios, but we see no reason in the law or the facts why this transaction should be any exception. It is routine for the DOJ to approve vertical mergers, which is exactly what this is. It's not like these companies have the same business. They don't. It would be a vertical integration as opposed to horizontal. And this is the type of merger that's routinely approved. I'm of the belief that yesterday's story was more of just a case of the DOJ playing hardball. I don't actually believe that they're going to block it, but anything's possible. But that's just my opinion. But I still see this going through.
And if it's going through, stock could be up at 108. So, there is some meat on the bone here now. It was 102, 103. The risk return was saying sell it up there from a merger perspective. I think the risk return gets more interesting here now. The one consideration is that media stocks have really been hit hard. I mean, you look at the Viacoms and the CBSs, and CBS actually had earnings. I mean, these things have just been absolutely annihilated. Even Disney not performing that well. If the merger doesn't go through, I think Time Warner could be back at $80. But like you said, there is routine to usually push through vertical mergers. So maybe this merger goes through, and maybe the stock eventually does get up to that 108 area where the takeout price, it's based on AT&T shares to a certain extent, but it's up near 108.
Yeah, quite a discount here, but the risk-reward ratio not that favorable. 13 points here if it goes through. But as Dennis mentioned, some of the other media stocks not doing well.
Probably 1-to-1. I mean, it doesn't go through. It's down at $80 or less.
What about CBS? Let's go to the CBS report.
Hey, look at the report here. I mean, Viacom's keeps getting destroyed here. CBS, give us a number, Spencer, and it's not good either. And I'm gonna have to leave because I want to go trade this jobs number there. All right. Spencer, give you the CBS report. They'll talk that, and then we'll talk the number.
All right. So CBS Q3 EPS $1.11 versus $1.08, and sales of $3.17 versus $3.27 billion. So it was a mixed report for CBS there in terms of Q3.
All right, boy, they've hit it. Chart not pretty going into the report. Bad day yesterday, made a new low for the move along with these other media stocks here. In order to fill the gap, not too far, you need to get up to 54 even. That was a low from yesterday. I'm sure a lot of people would like to see the close at 54.46. You had a nice drop off. Let's maybe look at the weeklies here to see if we can find some support here. Lower 54s. If I had to say, we're already through that, 53.85. I don't know. I just don't like this between under $54. And this is a weekly chart here. I don't know what had the big rally on that day. That was back in September of 2016. So look out underneath that pre-market low. Here we are, 25 seconds before the jobs number. S&Ps are up $1.75. Goldman Sachs has bounced back from that legal decision that went against it. So we'll keep an eye on Goldman. That got a little bit of a hit, but came right back up as Dennis predicted. We are 5, 4, 3, 2, 1.
And Bramster, I think, is going to pop in with the number, which he says will be in 10 seconds. Hey, Bram, what's going on? You're here.
We got 5 seconds, ladies and gentlemen.
All right. Let's see what we got.
All right. So non-farm number, we're looking for 310. It looks like it is coming in at 261 is the reading on non-farm. That is worse than expected. That's about 50,000 worse than expected, actually. That's not a great reading. The Private sector reading coming in at 252,000. The expectation there was for 303,000. Let's take a look at the unemployment rate. It looks like it's down to 4.1%. That's a good sign. Economists were looking for 4.2% unemployment rate, which would have been unchanged from the prior month in September. So let's see. Let's go over those one more time really quickly. So non-farm number 261,000. Last month we had a decline of about 33,000. The expectation was for 310,000. Private sector 252,000. That was last month. That was down 40,000, and the expectation this month was for 303,000, and the unemployment rate at 4.1%. There you go, ladies and gentlemen.
Thank you, Brent.
No problem.
Great. All right. Well,
so a miss, and an okay is what we're looking at right now. A miss on the non-farm, a miss on the private, and an okay unemployment.
I like our chat here. Those are great numbers. It's a miss for stocks, but every number is a great number. There are no bad numbers here. The skepticism continues. This is some of the mildest price action we've seen. We did make a new high at 79.75. I guess in a nutshell here, December rate hike, was it 60%? Does it stay at 60%? Because it's a little bit of a weak number, but really doesn't make a difference to stocks here. Certainly not giving anything back. See, Goldman's back down at 245. So not, I mean, it doesn't give a, I guess, a rubber stamp to the D's rate hike. That's what Wood Street was looking for. They hit Bank of America there a little bit down, 27.77 last price.
JP Morgan too.
JP Morgan. So not exactly what the financials want. Oh, lost a stick there. So not exactly what the financials wanted to see here from the jobs report. So they are a little bit weaker, but, not enough to, derail these, the major bull trend in these. Goldman, as I said, back down at 245.05. So, Spencer, why don't we, it's 8:33 here. Why don't we do one more report here? I think Dennis might be getting down and dirty in some stocks, and then we'll bring our guest on.
Let's do one of the street's favorites, and that's Herbalife. They came out yesterday after the bell. Q4 adjusted EPS of 82 cents is a 6-cent miss. 88 cents was the estimate. Sales of $1.1 billion, which was the estimate, so they met that right there. Fiscal year 18 guidance, adjusted EPS coming in lower than the estimate for the fiscal year. $4.60 to $5 is what they see. $5.36 was what Wall Street thought they would say. So a bit of a miss there for the fiscal year 18 EPS guidance, but a not great report overall there for Herbalife, and we know that's a shame for Ackman because he just closed out his short.
Oh, he did?
He converted his short to a put position that would cap his losses.
And then that expired
at 3%. I don't
no, because I know he did that before. Because if he covered his short, actually, then I might want to get short the stock. Okay. We forgot to ask Ivan about this because we had him on with that whole debate. Let's take a look at the multi-level marketing firm. Pre-market low of $65. I just don't understand this chart. They did the Dutch auction, had the results, took off to $80 here. Take it out, everything here at 68. I don't know. Are you going to get down and fill this gap here from that Dutch auction area? Let's take a look to see where that gap comes in Herbalife. I know it actually traded on that day. I wonder. Oh, here it is. I see. You have a gap between 66.62 and 62.31. So there's a area of limited support here in Herbalife. Not liking that report. Pre-market low, though, 65. All right, Spencer.
8:34. Time to go grab our guest for the day, Mike Olson. He is a managing director and senior research analyst at Piper Jaffray. He is the one that covers Apple there and most a lot of technology stocks, Netflix as well. So we'll talk Apple and more with Mike Olson in a moment.
Welcome back, traders and investors, to Benzinga's Pre-Market Prep, brought to you by Benzinga Pro. I'm your co-host, Joel Elconin, along with Dennis Dick, Spencer Israel working the boards, and we are joined by Mike Olson, Managing Director and Senior Research Analyst at Piper Jaffray. How you doing today, Michael?
I'm doing well. How you doing?
Doing good. And I just noticed here you hold a bachelor's degree in finance and investment banking from the University of Wisconsin, Madison, a fun place to be. Do you think your Badgers are a little bit overrated at this point? I mean, who have they really beat?
Well, that's a good question. I think there's definitely some potential truth to that. There's a couple real games coming up over the next couple weeks, or at least one real game with Michigan coming. So I think that'll be a true test for them. And really, I guess in the end, the bowl championship or the playoff rankings are showing that they're probably strength of schedule wise ranked a little bit too highly in the AP. I think they're fourth in the AP, but kind of more high single digits, eighth or ninth in the playoff rankings. And that's probably more legit. But we'll see what happens after they beat Michigan.
Yeah. Oh, stepping out here, Michael. I just want to tell you, Michigan, like all time, is like 85 and like 20 against Wisconsin. And I have managed to be at like 4 or 5 of those losses in the last 12 years. Two at Madison. And then when my friends come in from Madison, they beat us at Michigan too. But we got you last year. Going to be a tough game, but people don't want to hear about football. They want to hear about Apple. And you got a pretty high price target on this one. Talk about your price target. You're raising it today. Tell us what you like and what you don't like about the report.
Yeah, we feel good about Apple. The quarter was strong across the board, and the December quarter guidance itself was essentially in line with consensus, which that was probably the big thing. That was better than people feared. I think a lot of investors had expected a guide down due to the uncertainty around iPhone 10 inventory constraints. And a couple of key takeaways I would point to. First is that iPhone 8 really isn't doing as bad as some were thinking. And in fact, the iPhone 8 Plus they mentioned is the fastest selling Plus version of the phone ever. The company did mention that there's likely some buyers that are waiting for iPhone 10 to come out today before deciding which phone to get. So iPhone 8 probably was temporarily negatively impacted by that to some degree. But the other thing the guidance shows is that Apple just isn't as pessimistic as some investors have been about iPhone 10 availability for the quarter, for the December quarter, that is. So we feel really confident and confident on the demand side. The reason we're confident on the demand side is we did a survey of iPhone owners that showed the percentage who plan to upgrade this year rose to 30%, which was up from only 11% in our survey last year. So that's certainly a positive. The other thing I'll mention quickly is just the services business did extremely well. It grew 34% year over year in September. That was an acceleration from 22% in the June quarter. That did include some one-time revenue. If you strip that out, it would have been more like 24% growth. But either way, it accelerated, which was a nice positive.
All right. And could you find any negatives?
I'd say it was hard to really find any negatives because across the board, as far as units on almost every product, there was upside. The only thing I would say is really just that on the margin front, the gross margin was just fractionally a tick below where consensus came in at 37.9%. Street was at 38%. So we're really splitting hairs here. But the issue on the margin front, it sounds like it's primarily related to higher memory costs, and that could weigh on margins a bit over the next few quarters as well. So that would be the only thing I would point to is memory pricing headwinds, but that's typically somewhat cyclical and a temporary issue.
Mike, I wanted to hop in here for a second. What are your plans for today with the iPhone 10 out? Where are you going to be at a store somewhere, and what is your initial thoughts on the launch today?
Yeah, it's a good question. We will visit some stores just to kind of see what the lines look like, and talk to buyers. The thing that we're focusing more on this year is kind of trying to do more extensive survey work outside of the launch, and part of the reason for that is sometimes when you survey people in line at early in the morning to buy these things, you get a little bit of the iPhone cult that, or Apple cult in general, that maybe has a little bit more biased views. So we're trying to do a bit more broad-based surveys this year, and that's why I feel so much more confident this year, given our survey, which isn't necessarily, again, tied to just those that are waiting in line early in the morning, is showing such a significant increase in iPhone interest. And I mentioned the interest as far as people who say they're going to upgrade this year for sure. But if you look at those that say they may upgrade or will upgrade, that was 48% of people in our survey of iPhone owners, which was up from only 35% last year. So either way you look at it, there's a significant uptick in interest.
So, Mike, now that the earnings report is out and all the new phones are out, what are your thoughts on that story we had 2 weeks ago about the weak demand and the supply chain issues over in China that hit the stock down a little bit? In hindsight, it all seems so overblown, but what are your thoughts on that?
Well, I think there was some truth to the weak demand for iPhone 8, just because people were waiting to see what iPhone 10 looks like, hold it in their hand, try it out. I think that the other thing that was going on is every review for iPhone 8 that was out basically suggested if you can wait to see the iPhone 10 and you think it's something you can afford, why not wait to at least see it and check it out and get the feel for it. So I think there was some truth to that. Now, again, that was certainly overblown to some degree, and given the company talked about iPhone 8 Plus being the fastest selling Plus version ever, it wasn't all bad. But I think as we look out to iPhone 10, it also now appears that maybe some of the concerns around supply constraints are overblown as well, because the company is obviously guiding, in line to fractionally above where consensus is as far as overall revenue. So that just suggests to us that the company seems to have a bit more confidence as far as what the inventory availability of iPhone 10 will be later this quarter.
We're on the line with Mike Olson. He's the managing director and senior research analyst at Piper Jaffray, going over the Apple earnings report with us here live on Benzinga's Pre-Market Prep. What are they going to do with all this cash? I mean, they probably just got a lot more cash. A lot of it's overseas. I don't know if they're waiting for a change in the corporate tax rates. I mean, they didn't raise the dividend. They're not buying back more stock. They're not making acquisitions. I mean, what are they going to do with all that cash?
Yeah, it's a good question. They have $252 billion of cash held overseas that, if we see some sort of favorable repatriation situation, they may be able to put to work in some way, shape, or form. And I think my guess is it would be some sort of combination of primarily return of cash to shareholders, and then a few small acquisitions here and there. I'd be surprised if they do any sort of large content or other technology acquisition. It's not been their style historically, and we think it's more likely that they will do acquisitions that kind of add to existing technologies that they're working on. Maybe something more in augmented reality or artificial intelligence, or those categories.
All right. And just going the other thing, I mean, for me, the only thing is like the battery. And I mean, I don't know if I keep too many apps open. I have to charge it every night. Am I the only one? I mean, is it, they're doing, I mean, I think that's the only weakness I could see in the phone. There have been any developments on that to improve the battery life?
Well, they have talked about the battery being to some degree better on this phone. They've said that the iPhone 10 battery should last 2 hours longer than the iPhone 7s. We'll have to see. I think that's one of those things where once you kind of test drive it and start really using it, you kind of find out what the reality of it's going to be. And in general, I think it's just an annoyance that we certainly all have across probably all phones, not just specific to Apple. So that's a huge potential area of innovation in the next decade that we could see a shift in
what's your current price target?
Yeah, our price target on Apple is 200.
Okay,
which is based on 15 times earnings. So
is that today, or is that going to be like next week?
Yeah, so it's a 12-month price target. So we'll have to see, but that's what we have right now. $200, 15 times 18 EPS.
Wow. Okay, you cover other stocks too, and let's go to the other big gun, Amazon. Just blew it out of the water with that report. Really caught the street. I can say off guard here. Talk about the Amazon report. You hit 1122.79, starting to leak a little bit off that. Talk about that report and your price target.
Yep. So our price target's 1,200 on Amazon, which was unchanged from where it was previously, and that is also a 15 times multiple, but on 2019 EBITDA. And we feel good about Amazon for a number of reasons. I think when we look at the Q3 results and the guide, I would highlight a few things. One was the strength of Prime Day, which is their invented holiday, drove revenue upside. I think that was a big part of it, and that was through increased Prime subscriptions, and it also drove. We saw a mix shift towards first-party sales from third-party sales, which they have a higher margin on or recognize more revenue on, so that helped as well. But the other big thing was AWS, which primarily is the biggest area from which they can pull dollars to spend elsewhere because AWS is so profitable. AWS showed no deceleration in Q3, which helped to significantly contribute to both revenue and operating income upside. The other thing I would point out is the high end of their Q4 operating margin outlook is in line with where consensus was going into it, and Amazon typically exceeds the high end of that range. On average, actually, if you look over the last 7 quarters, they've exceeded the high end of their operating margin guidance by about 20 basis points or 0.2%. So if they did that again, that would result in around a 3% operating margin for the quarter for Q4, which would compare to 2.8% street operating margin going into the quarter. And then lastly, I would just mention the other segment revenue, which doesn't get a lot of airtime, accelerated to 58% growth from 51% growth in Q2. And that's likely being driven by high margin advertising revenue. And this is going to be a topic that you'll hear more and more about over the next few quarters and years, is that Amazon is generating now, we think, several billion in advertising revenue as more and more products are being advertised in the kind of search results, similar to how you may have historically spent time searching for products on Google.
All right, let's move on to a stock that hasn't reported yet, Priceline. Expedia took a hit off their report. Priceline yet to report. Why don't you give us your opinions on these two issues? Expedia starting to recover from that earnings washout. Let's go ahead with Expedia, then Amazon.
Yep. So as far as Expedia, I think if we were to boil it down to the most simple level, probably what's happening here is you have a new CEO and CFO that have taken over, and they're kind of resetting the bar, clearing the deck, so to speak, as they come in and kind of start their next several years or however long as the company's leadership. And in some ways, it's certainly not what investors want to see, with the stock getting hit that much, 15% in a day or so. But at the same time, it makes sense that they would do that to try to put their stamp on kind of where they want to spend over the next several years, start investing in marketing of certain components of the business, as well as improve product development. And those particular areas are really growth of international for their core OTA or online travel agent businesses, Expedia and Hotels.com, as well as growth of product development and marketing for HomeAway for alternative accommodations, which is certainly the fastest growing category in online travel. As we look to Priceline, one thing that I would note of interest here is that Expedia's miss came entirely at domestic. They actually beat international consensus estimates by about 6%. And if you look at Priceline, about 90% of their bookings, or slightly more than that, actually, are international. So the negative impact from Expedia on a few things, including the hurricanes during the quarter, probably won't be as negative an issue for Priceline as it was for Expedia. So I do think Priceline is going to continue to aggressively spend on trying to gain and maintain market share. So we wouldn't be surprised to see Priceline's guidance be slightly below where consensus is, but I don't think the Q3 results will be as negative as what we saw with Expedia, given that international exposure for Priceline.
Okay, one other stock here, kind of different than these other ones. You cover Zynga, ZNGA, big Candy Crush, right? That's what they make. Talk about this stock. Not a big mover. Snuck over $4. Got a report coming up on November 7th. Looking for a 2-cent gain. They only make a little over 200 million. Bullish, bearish this issue. What do you comments on Zynga?
Yeah, so Zynga is actually they're not the Candy Crush company. That's King, which is
that's right. That's right. I'm sorry.
So yeah, Zynga is more Zynga Poker, Farmville, CSR Racing, a bunch of those types of games. And I'll just give you the quick hit on why we like Zynga, which is that most of the management team has recently come from Electronic Arts, and they're essentially taking a page out of the book of what Electronic Arts has done over the last 5 years, which is a combination of cost containment and improving player engagement with existing titles. So it had historically been the focus of a lot of mobile game companies to, after having a hit title, just try to put all of the forces and investment into creating another home run title. And oftentimes those efforts were fruitless. They didn't end up creating a home run title to kind of backfill the decline that we may have seen in previous hit titles. So Zynga has taken a much less risky approach by focusing more of their resources into keeping the existing player base engaged in current titles, and then also continuing to develop, but with less resources, new titles. And this creates a situation where they have a nice growing underlying, more high visibility revenue stream from their existing titles. And if any of the new titles happen to work, it's kind of all upside versus where expectations are. So we like the combination of that and the cost containment that they're putting into place. Price target for Zynga. Yeah, our price target's $425, which again is happens to be 15 times EBITDA.
We've been on the line with Michael Olson from Piper Jaffray. He's the managing director and senior research analyst, making some good calls there on Apple. We appreciate your time and your input on this busy day, and we'll speak to you again soon, Mike.
Thank you. Have a great day.
All right. S&P futures are starting to leak here a little bit. We got in that 2580 handle, really nothing up at 2581.25. That's your pre-market high. All-time high from Wednesday, 85.50. I don't know. We might go red here, Dennis. Pre-market low 76, even 76.75. Any action off that number?
Just the financials. The financials definitely took a hit on it. So, Goldman, which was down a little bit ahead of the number, they were right on that because obviously the number came out and it, wasn't the number that they wanted for, to ensure an interest rate hike next month. And that's why you saw a lot of these financials take a hit on it. Bank of America dropped about 20 cents on the initial number. JP Morgan fell about 50 cents. You had Citigroup, Goldman falling $2. So a lot of weakness was in the financials. They have bounced back.
Yeah.
Those are only down slightly here now. I always like to look at the TLT. The TLT had a little bit of a pop. It's pulling back a little bit off those highs as well, too. So actually, when the dust settled here, it's pretty much what you expect, not much action at all. So, it's probably going to be an earnings story here today, but financials do look a little bit weak still in the pre-market, just a little bit.
All right. We did have Apple continue to rally. Did get up Another whole number. Forget 175, folks. My new number is 176. 175.95 is the pre-market high. A lot of times you see a high from the pre-market session stand as the high of the day. So right now, sellers changed their mind at 175. They're up in 176 instead. Spencer?
I want to see where it opens.
Yep.
And just be careful with the open, because multiple times we've seen it that the stocks open, on good earnings near their highs and start, giving it back right away. So let's see where it opens. If you're participating in the open, I may try to short on the open and just see, but if it starts to make new highs and I want to get out, setting up that scenario where, you could potentially get short a stock opening at its high. And we don't know that, obviously, until stock opens, though. And if it continues to go higher, I'd immediately get out of that trade, though. So it's always risky when you're shorting stocks at all-time highs.
But you know what you also could do on this one is if you had a big position, I mean, you're getting a lot of juice, right? After the number, I mean, there's going to be some jacked premiums in that thing, right? So if, you could get a 180, what if you could get a 180 call or 185 call off for, $6, $7, $8, $9, get a little bit of price protection there. I know you don't do that.
I hate buying options. I'm just going to
sell. I said sell.
I know you like it.
Sell. I said sell. Sell a call.
Sell an option.
Yeah.
I'm all about selling options. I just think the premiums are there. And if
they're
you're
going to be huge.
It can be, but the problem is that a lot of the premium comes out of it now after the event. So now you're going to work off intrinsic value more than anything. So I always think there's good opportunity ahead, but you got to be careful when you're doing that as well.
All
See
right.
Pandora?
Let's see.
I had 20 steak dinners from you, I think. 5:30 now.
Oh, you balked. You look at that.
I should have took you on that bet. Stock was 606 and you were giving me 5. What were you giving me? 10 to 1 odds?
Oh, I was going 20, 30, 40.
Oh man. It's gonna trade $5 today, I think.
It won't close under $5 though.
Joel's changing his mind. We're giving you trades live on the show. We were hating the stock. Well, I was hating the stock.
You were.
I put a 0 price target. When it was 606, that was a half an hour ago. It's 5:30. You're already up 10, 15%.
Yeah, but Dennis, you can't change your ratings intraday. People are not going to pay for that.
I didn't change it. Oh, yeah, I know. I've been 0 price target on this for a while.
All right, it balances. We got a minute 45 left here to wrap.
Baba, 193,000 to buy as always. Twitter, 82,000 to sell. That's interesting. Twitter has had a sell and bounce 4 days in a row. There's a trend now. It is upgraded today, though, so that could be an opportunity to maybe get in on the cheap if it opens up too low. It's upgraded at Argus, price target $25.
I don't know.
I'm going to take this opportunity and I want to reignite a rumor right now. Okay, on Twitter. I want to reignite a Twitter rumor right now. Brent's saying don't do it. I'm gonna do it though. I want to reignite a rumor that Disney should buy Twitter, and I'm saying this now because yesterday ESPN is of course owned by Disney. ESPN released their updated social media guidelines, and it's a 3-page document. Buried in there is this bullet point. It says, and this applies to all ESPN reporters, journalists, etc. It says, and I'm going to quote now: "Do not break news on social platforms. We want to serve fans first. We want to serve fans in the social sphere, but the first priority is the ESPN news and information efforts." And then it goes on to say, source or proprietary news must be vetted by the Universal News Desk. Once reported on an ESPN platform, then news can be distributed on social platforms. So they're basically saying, they're telling all the reporters, don't break news on Twitter. I'm saying, and hat tip to Nick Donato, who brought this up, we're saying, just kill 2 birds with 1 stone. Just buy Twitter and problem solved.
Dennis, do you want to wait?
Spencer's starting rumors. You got me thinking too here, Spencer.
Just buy Twitter and your problem is solved.
We know they thought about buying Twitter at one time.
Yeah,
that was on CNBC that they had actually contemplated it, but I think evaluate or whatever it was, they did not. I mean, could Twitter still get bought out? What's the valuation of this thing right now?
You're gonna still say it's too high.
It's so high. What is it? I gotta go see. What's the market cap? Let's look. Spencer, it's a race. Market cap as of yesterday, I'm beating you. It was $14.6 billion. Market cap on Disney, and Disney probably has much money in cash. Disney $151 billion. It's a big chunk for Disney to swallow, really, when we think 10% of the equity. But they could use their stock, or they could do it in different ways.
All right. Well,
I don't know. I mean, I think it's just too expensive for anybody to buy it. That's my own personal opinion. I've never figured out how to monetize it themselves, but it is, obviously competitive to a lot of these media companies there. And maybe one just gets sick of it, like Spencer's saying, and scoops them up.
all right. We are going to end today's session a minute late here. S&P still up a stick. It's 78 even, $2 above the pre-market low. So we're looking for that to hold. If not, might see a little downside. On the upside, 81.25 pre-market high. Nothing up there above that besides your all-time high from Wednesday at 85.5.
And Dennis, were there any other large imbalances besides Twitter and Baba?
They're all pretty. Okay. They're all pretty mixed. The financials a little bit to the sell side. Snap, SNAP at 44,000 to buy. Bank of America's 95,000 to sell. GE small today, only 27,000 to sell. I guess that guy's out there in the pre-market there because it's 100,000 to sell in 1994 in the pre-market. It's one of the biggest orders you'll ever see in the pre-market. Somebody's showing their hand there. So trying to hold stock down. I don't know. It's mixed market today. This is gonna be a tricky day.
Okay. Well, that is our show for the day, and that's it for us for the week, folks. Looking ahead to next week's slate of guests, we're joined by Rachel Shasha. She's a trader who joins us every so often. Mark Chicken will be on the show. The Reverend Emmanuel Emerson will join us. He's made a couple of very good calls on our show. I think last time he was on, he brought up dominoes, and he was on the money there, so I'm sure we'll talk about that. That's next Friday. And I'll have the full slate of guests for next week up on the bottom of the pre-market website later today, so you can see who will be on the show next week. But that's it for our show today. Catch the podcast on iTunes, SoundCloud, and Stitcher if you desire. Don't forget to like us on Facebook at Pre-Market Prep. Have a good rest of your day, folks. Have a good weekend, and we'll be back with you on Monday.